Good afternoon, everybody. What's going on? Happy CPI Day. We survived another one, I think. Hopefully the YouTube is up and running and working. I'm on a different computer today, so the issue I had yesterday should not be impacting today. I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Thank you, Rich. Position disclosure here is roughly the same. Long Vixie is a swing. It's a terrible, terrible product to be long pretty much ever. So I better work quick or I'm gonna lose money on it. But today is a very interesting day. Let's have a look. So we closed red in the SPY and we're trading down further after hours. We closed green in the Qs, but we just ticked to red here after hours because we're trading lower after hours. We're down another 50 cents. So we closed small green in the Qs, and we closed down 2% in the IWM. That's no joke. RSP equalated S&P 1.3%. So you know it. It was mega cap. It was Nvidia that was holding up the Qs. It was incredible to type up at like not even that far away from the close. We sold pretty hard in the close, but I was looking at the Qs like up 0.4% with the IWM down like 1.5%. So just terrible breath today. A couple stocks holding up the Nasdaq. You know what those names are. They're the same names as they always are. Nvidia, especially getting hit with some good news today. Nvidia was up like 4 or 5% on the day and really helped hold the Nasdaq up. Some of the other Mag 7 stocks were okay as well, kind of at least going sideways and not really breaking down as much. But the Russell was terrible. The TLT finished down 0.75%. That's very notable. You can see here on my chart starting to accelerate down. As TLT does not look like a problem to me yet. But if this rate of descent that we saw today were to continue for a couple more trading sessions, a very fast move through 84 by tomorrow could become notable really quick. Gold today was down. Oil, not getting a quote. There it is. Oil down 0.5%. The dollar closing green. Yeah, the dollar is also notable here. Actually lifting a little bit higher. 2750 is an important level for the UUP ETF that we should pay attention to. But stronger dollar hurts the equity market. And Bitcoin got hit pretty hard as well, 2.8%. Bitcoin obviously has been on a tear. But when you think about how weak the dollar has been this year, it's not as strong as it would be otherwise because we look at this in dollar denominated terms. Um, but all the same, Bitcoin has been on a tear, gave a big pullback today. But all that pullback is, you can see on the chart there, is a move back to the 80 MA on the daily. But the TLT move is interesting, and the market move today is very interesting. Why is it interesting? Because we had every reason to break out and continue today. Every reason. Um, you know, I guess can this turn into something more? That's the first question. So we had a breakout failure today. We had a CPI that came out this morning that was pretty darn perfect. Core CPI came in light, and that's the most important thing. With that said, we had seen a Goldman Sachs whisper number that maybe puts that core CPI a little bit more in line. And even though it meets expectations, even though kind of just met expectations, it does represent an uptick in inflation. So my understanding is that we saw a very, very, very small increase on the CPI number coming from tariff-related impact specifically. But there's a potential that it's just the teeny tiny tip of the iceberg. So we will see if there is more behind the iceberg or not. But it's impressive that we had good news today and we sold off on it, or at least not bad news and we sold off on it. because that hasn't happened. We haven't been able to sell off on bad news, good news, neutral news. Literally nothing has been able to get this market to sell. And today we gapped up on CPI in such a way that we were gapping up above SPY 627, technically setting up for a breakaway gap of last week's consolidation of the bull flag, and we failed. And that's with the CPI. It's also with the largest market cap company in the world having news that caused it to gap up 5%. And we were still able to close like this with the SPYs. We're continuing to trade down right now. It's almost beginning to turn it into a bearish engulfing candle if you include this afternoon, this after hour trading action. We were kind of chatting like into the close, like, is this one of our infamous days to take notice of? We haven't had one in a long time. Last one I really remember. It's a term that we use. If anybody's new and you've traded with, you only started trading with us in the last 1, 2, 3, 4, 5 months, you probably have never heard that term before from us. A day to take notice of. A day to take notice of is typically some sort of a bearish engulfing candlestick on the daily chart in the indexes is typically what we're talking about when you've otherwise had a really strong market. The last time we had a major day to take notice of was February 21st. Oftentimes, when we have those, it leads to some degree of a market pullback. Sometimes it's 3%, sometimes it's 5%, sometimes it's 10%, or in the case of the February day to take notice of, this February 21st, it led to a bear market. It led to, I guess, technically not a bear market. It led to a 19.7% down move, so like 0.3% away from an official bear market for the S&P. But this is almost, I think, I was hesitant to call it a day to take notice of because I didn't feel like it engulfed anything. It was just it was notable because it was a breakout failure. But again, we're continuing to trickle lower here after hours, and it's starting to engulf some of last week's price action. So I think that today's really notable because we were able to do this and create a false breakout and that included a good CPI, and it included NVIDIA having good news. So I think it's really notable. The other thing that I think is notable started last week. Last week we should have went higher from the systematic bid, and we failed to do so. So that's the other thing that I would say is notable about where we're at right now and might be indicating at a minimum that this market's getting a little bit tired. Not necessarily that we're ready to test April lows at this point. Maybe this is the beginning of something more. But at a minimum, this market is just starting to get maybe a little bit tired. Like I mentioned the last couple of days, SPY could pull back to 610 to 615. And as far as I'm concerned, still be healthy overall, technically healthy. But, we are at an interesting spot here. Market dynamics are still bullish. We got a CTA update today from Goldman Sachs during the day today. The CTAs are still bullish. They're set to buy $5 billion of stock in a flat or up tape, more or less, over the course of the next 1 week. Even in a down tape, they're set to buy $2.5 billion worth of stock. So they're still supportive. When you look at the 1 month number, the 1 month number has buying in a flat tape, buying in a, and Pat, I don't know if you're listening, if you want to repost it for me so I can just give these numbers instead of just going off the top of my head. But the monthly has like 30 billion of buying in a flat tape or an up tape, something like that. But like larger selling into a down tape, like 40 billion plus. So when I begin to see that, we're not hooked to the upside from a positioning perspective in the way that we were in February, but we have increasing risk to the downside if you can get something to trigger it. And that's the big if. Can you get something to trigger it? The Goldman Sachs CTA like short-term sell trigger is still all the way down, like just above S&P 6,000. I think it was like 6,003 or something like that. So you got to get all the way. You have to fully negate the breakout that happened on June 24th in order to get the market to, yeah, it's so far away to actually hit that CTA sell trigger. But what do we have going on? We just had CPI, which in an event it wasn't, but we sold it anyway. We have Vixpiration tomorrow morning. We have OPEX on Friday. Those are some market dynamic events that tend to change things sometimes a little bit. I've been quoting in the beginning of July, like July 1st or something. I read a Goldman Sachs note that was a position related note that basically said that they're structurally bullish until July 17th. July 17th is Thursday of this week. So, that's Thursday. If expiration is Wednesday, it's tomorrow. And OPEX is on Friday. We know that OPEX can sometimes loosen this market up a little bit. I think that the market actually has already loosened up a little bit, to be honest. I think that the gamma numbers have come down a bit. They're positive, but they've come down a little bit. So, the bottom line is that you still need an event. There are a bunch of potential events that could trigger this market as we start to get into weaker seasonality. Beginning July, especially the beginning of July, we know just has super, super bullish seasonality. I think that they front ran that a little bit this year with the June breakout. But that July 3rd day was just incredibly strong, like it always is. Last week we held up okay, but we're starting to get closer towards weaker seasonality. We are already past the point from a day or two ago where the VIX seasonally bottoms, and since then the VIX has not gone up, but hasn't gone down. So we'll see if the VIX can give any more, upside follow through or not. And you got some catalysts, so we've got some potential catalysts in the beginning of August with the tariff event, and we also have the trade war stuff, August 1st, which I'm not going to pull it up, but the Goldman note that was in Pat's note this morning talked about the same thing that I've been talking about, which is the market doesn't seem to be pricing in at all whatsoever that the August 1st delayed tariffs that Trump announced over the course of the last week or so are going to go through. The market is 100% saying it's not going to happen. The market is 100% saying that Donald Trump is going to do another taco. I'm not as sure about that as the market seems to be, to be totally honest. I think that he gets emboldened when the market does really well and the market's sitting at highs. And how much can he continue to delay this and still save face? You know, he delayed it already from the beginning when it came to Mexico and Canada. Then he delayed it again until July 1st, sorry, July 9th. And now he's delayed it again until August 1st. I kind of think that the market's not pricing in enough of a probability that the tariff numbers that he has announced in the last week or so actually happen. Because if they do happen, that's a potential catalyst right there. And the other thing I noted already, but it's worth mentioning again, is just with this inflation report and with any potential economic slowdown that comes from these tariffs, it's not going to be something where it's like, I don't think, where all of a sudden you just get punched in the face with a CPI number like today that comes out triple expectations because tariffs hit. We have to remember, and this is why I paid so much attention to like retail earnings this last earnings season, almost more so than I ever have. We have to remember that these companies, the S&P 500 companies, just generally speaking, are managed incredibly, incredibly well. And when they can foresee that something's going to happen like tariffs, it gives them an opportunity to prepare for it. So they prepared for it. They loaded up on inventory ahead of time. So you got to see, when that actually begins to impact the numbers is going to be a lot more of a trickle in effect, I think, than just like a slap in the face all at once, really bad number happens. Because when you look at those earnings reports from these major companies, you have like, on the one hand, the Walmarts of the world that were saying that they might have to begin to increase prices, I think, as early as the end of May. But then you've got the Nikes of the world that say, we're probably not going to have to increase prices until the fall. So a lot of the companies are probably going to be within that spectrum. So for today's CPI, which represents June, you saw a little bit of a beginning of a trickle in on tariffs. And the question is, that number increasing. How does that number increase, and what does that look like over time? We will see. And the same thing is with employment. I actually think that a bad employment number is like the worst thing that could happen to the stock market if we really start to see unemployment begin to increase. But we're a long ways away from that, right? Because if the companies aren't really being impacted by tariffs yet because they front loaded their inventory so much, they're not doing everything they can yet to squeeze every penny out of their margins to keep their margins strong. And part of keep doing that would potentially include more layoffs. So we'll see. But I do think that today was a breakout failure, a borderline day to take notice of. Let's see if we get any follow through tomorrow. We have expiration and PPI tomorrow. I don't think that tomorrow, a gap down tomorrow, to answer Rich's question, is viable outside of a small trade. If we were to get a really big gap down tomorrow, then you follow your usual gap kind of playbook where you can come in on the other side of that for like a small trade initially. But if we gap down tomorrow, you could kind of make an argument that tomorrow is just like a day two down. And I think that would be too early to potentially come in and buy. If we were to be weak tomorrow, I wouldn't be looking to attempt to buy this dip until we get into that 610 to 615 area. And then we can see when it gets there. Don't be too early if it's the first time they're actually losing some support on the daily chart since April. This is the beginning of April. Don't be too early to be the first one to buy it, I don't think. So yeah, I mean, so that's pretty much it from the index perspective. Trying to think if I have anything else to say. From a day trading perspective, didn't really do too much new. I somewhat aggressively shorted Nvidia pre-market at like 172.40, just above 172.40, because I thought that maybe this Nvidia could be a buy the rumor, sell the news type of event, because I thought that this was pretty well forecast, right? Everybody knew Jensen Huang was going to be speaking to Donald Trump and then he was going to be going to China. And then they gapped it up 5% when we saw that, something positive came from that. I think that Jensen is going to be speaking tomorrow in China. So the event continues. So maybe there is still some time to buy the rumor and, in this case, now sell the event. But I was able to get a really, really good price on that pre-market. Was in the money on it pretty much all day. So that was able to be helpful. I had a pretty good day trade on AMD to the short side off of this shooting star. AMD was actually even stronger than Nvidia off of this news, because they're going to potentially be able to sell some of their semiconductors in China again. That made for a good extension shooting star. I just took that as a day trade. It pulled back to the 80 MA on the 5-minute chart pretty perfectly. And yeah, I mean that's pretty much it. I have a couple small shorts and a couple crazy stocks like this QS. QS, I think did I start that yesterday? I think I started it yesterday, like into $10, real small. Then it gapped up on news this morning, so I got a little bit heavier in that. But this QS is starting to get a bit silly here. JOBY also had news. I had like three stocks that I was short have good news this morning. And one stock that had bad news this morning and went ripping higher anyway. The open was kind of crazy. But JOBY also had good news this morning, and I was swinging a little bit of that short. Luckily, both QS and JOBY were very, very small, like kind of starter feeler positions. So was never really in bad shape in these too much at all, even in the face of having a little bit of a swing short on and the stock gapping up 10%. So a little bit lucky there. But I got a bit heavier in both of them because they both continue to extend. Particularly this QS is getting a little bit crazy. Trying to think if I did anything else. It kind of covers it. I'm back in Tesla. Tesla's been holding this 320 resistance for 2 days in a row extremely well. Someone's selling there. They sold that 320 yesterday, which is a spot that I was shorting at, and then they sold that 320 again. They sold it on the opening bar. They tried 3 different times after that to get it back above 320. It was trying to show strength, and then it just failed. And then who quit? Somebody in Tesla quit. Somebody's got to let me know who it was that quit so I can rag on the stock a little bit when I'm talking to Sammy and JR tomorrow. But they lost some other, key player for Tesla today, and that hit the stock down a little bit further. Um, China names, the North American sales head. Thank you, Dennis. China names look much better after today. They also were helped. The China names benefited even more from the Nvidia news, I think, than AMD and Nvidia did. We talked about this briefly, I think, yesterday, that it was interesting that I thought that FXI looks really bullish. Like FXI and Yin, I think both look really, really bullish. But like Alibaba and JD, like the two most important companies in there, didn't. And JD honestly still doesn't. JD's got to get above 33 to look better, in my opinion. I no longer have a position in it right now. But Alibaba looks good again after today. I mean, probably needs a little bit of backing and filling because today's move was so big. But Alibaba above, I think like 112 again. Stock starts to look pretty good with FXI looking good. Baidu, I think, looks really good as well. Baidu is actually my biggest position in my retail account right now. So pretty happy to see that one. China looks fantastic. So yeah, pretty much all that I've got. Palantir was interesting today with the 150 failure. Could easily go after it tomorrow and break it and continue. Gave a big day one to new all-time highs yesterday, and then today, with the way that this name trades, it should have worked. Obviously, the market didn't particularly help it. It like should have given a day two today, and it just was really heavy and failing up in that 150. This first high was 149.99. Then it, tailed above 150, but came back down. Was trying to ride this ADMA, went after it again, made a new high by like 5 cents, and then failed a second time and couldn't continue. But this Palantir is by no means broken. It looks like it's still ready to go if you can get any market help. Just needed a little bit of a break, a little bit of a pause today. Palantir only becomes bearish again if it loses yesterday's low, which is 142 quarter. That's very far away. So yeah, that's all I got. Happy to take a look at whatever you guys have as far as questions go. I don't know if Dennis is asking me a question or not. Let me just read it out loud. I am simply just going with my supply theory in combination with daily chart extension here, and we'll be looking and we'll look to start shorting more aggressively in the coming days and weeks. At least that's the plan for now. I like the plan with the signal. I'm assuming you're just talking about market wide. Supply indication is that my supply indicator now has 2 areas where supply came in, and that is usually one of the better signs there for me. Okay, cool. From Dave S. Wondering if there was anything anyone in the room did in the index on the short side today. I wasn't able to be in the room at my desk this morning, and it looks like that idea worked in general, but don't see any any entries besides somewhat chasing SPY at 1020 for the inside 5 and down. Yeah, I'm for both SPXL and TQQQ, but for me they're just kind of small-ish swing trades that I have on that I'm managing. I kind of want to size up in them. I've got some bearish options positions in as well for the potential of one of those catalysts selling us down, and I'm also long some UVixie now as well. I'm sure you love that. But yeah, I didn't actually call out any index level shorts today. I know personally, I think I called some out in the last couple of days that worked okay, but I didn't call out a single one for today. It's been so I'm gonna I'm gonna repeat something that I said earlier today when we looked at Meta. So Meta at one point today, we were looking at this 714 here, and or maybe it was 715. I don't remember. It was either 715 when it tailed off at twice or 714. I don't remember. But what I remember saying at that point was like, let's watch this level and you could potentially look to short it for momentum continuation. I think it was 714, and eventually it did break. It just didn't break till the afternoon. I was like, let's watch the 714. If it breaks, you could potentially short it for momentum continuation. And then what I also said was, no one has gotten paid on a trade like that in anything that's market related since the beginning of April. It's been months since you've been able to get paid by looking to short like the break of support on an intraday basis in this meta today, for example. You have been consistently punished for attempting to do that. If you've been trying to short anywhere for continuation on a weak open or a gap up sell down or anything like that, you have been punished over and over and over again. But I'll tell you what's going to happen. All of a sudden, at some point, that trade's going to work. And it's going to work hard, and it's going to work fast, and it's going to work all over the place. I don't know if today is the first signal of that, because look at Meta, it eventually broke that 714 in the afternoon and actually did give downside continuation. This is an example of getting paid for looking for that, further follow through to the downside that has not paid at all. So maybe today, with the potential day to take notice of in the market or this breakout failure, is signaling to us a potential change in the environment of the market that can make those trades pay again. But all of a sudden, those trades will pay again. So even if it maybe today didn't make sense because they haven't worked at all, maybe today it didn't make sense to try to push for further downside. If we begin to see that that's working, then we have to be willing to go after it. It's not going to be like all of a sudden on one day that trade works and then never works again. Usually, if we get a day where that works, we're going to get multiple days where that works. So we want to keep that in the back of our head that at a certain point, we're going to be able to push for downside continuation. You just haven't been rewarded for it in months. In fact, you've been punished for it. So I think when you're looking at the index chart of the SPYs or the Qs today, and you're asking yourself, like, where could I have shorted to push things further to the downside? There's some pivots there you could have looked at. Like, I don't know, like maybe this pivot in here. This is what you were talking about, this pivot high with the inside and down after. But you've just been punished for going after those trades recently. And it will change. So we'll see. Ryan saying, for what it's worth, MACD sell signals on SPY and IWM today. It's a signal I like for lower prices coming. We shall see. Going home with small U Pro short. Okay, cool. Greg M. TLT just traded back to a new low of the day. The Japanese bonds will be worth tracking tonight and into tomorrow. Yep. I mean, that could be a catalyst as well. I was talking about the trade war catalyst. I was talking about the unemployment number catalyst, but the bonds could be a catalyst as well. If this TLT really begins to accelerate lower, really begins to lose that 84, could become a catalyst also. But that's what you need. This market, you have just a healthy pullback to 615, maybe even 610. But if you want like a real sell-off that could eventually trigger the CTA levels that lead to a feedback cycle of selling, you need an event. You need an event that can come in that can change the feedback cycle of buying to a feedback cycle of selling. And we are pretty far away from that overall, but some notable things I think with the lack of upside continuation last week through today. So thanks for that, Greg. Over to the YouTube. Let's see what's going on. Thanks, guys. From Chi, in light of increased dispersion, CTAs, trend following funds are unable to capture non-existent trends. Would you say that due to that, it will be hard to see CTAs fully exposed to equities, and we will continue to see balanced positions amongst trend following funds and equities? Can you give me your thoughts on large inflows into leverage ETFs and how they have to balance their hold? All right, so that's the second question. Let's start with the first question. So the dispersion trade, I think, what the dispersion trade turns into is a market that kind of grinds higher, and the CTAs in that case are able to continue to buy. And we already have, I read them out loud, our updated kind of Goldman Sachs modeled trend following CTA numbers. Their buyers this week, probably because of this recent uptrend that we've been in the end of June through the beginning of July, their buyers in this week, the CTA trend followers in any scenario, even if the market goes down, they're small buyers. $2.5 billion is not a lot, but they're still buyers into a down tape this week. And the vol control funds are also continuing to buy because of the 3-month look back, unless realized volatility were to begin to increase. But if you continue just to get 0.5% up or 0.5% down movements at the end of the day in the S&P, vol control funds are continuing to buy. With that said, we've gotten through the worst of it all when it comes to CTAs. Their positioning is starting to get a little bit stretched, and the vol control funds have rolled off now on the 3-month look back the largest realized volatility days that we had in April. So that's why I was saying before, there is becoming a positioning risk to the downside. Like we're in an environment now, it's not like February where it was overwhelmingly to the downside. In February, there was no one left to buy across the board, pretty much. Hedge funds as well. They had nothing left to buy. Systematics had nothing left to buy, pretty much across the board. We're not at that spot right now. Hedge funds could be forced to buy more if the market continues to move higher. And we know that generally speaking, the trend following CTAs and the vol control fund CTAs, if the market were to stay quiet, grind higher, move sideways, if the market stays quiet, they're going to continue to be buying for a whole nother month till at least mid-August. They're set to buy. But the difference is that the positioning risk, at a minimum, you could say, is becoming more balanced. If the market stays quiet, they're going to continue to be buyers. But if you could get a catalyst, this is the if you could get a catalyst, they're long enough now where there is a selling possibility that could come in. If you start to see like down 1.5% days or even up 1.5% days in the market, that's actually going to cause vol control funds to become sellers. If you see the CTAs, the real CTA sell trigger is so far away. I mentioned it earlier. I think it's at like 6,003 in the S&P. So you basically have to fully retrace the June breakout to get to the point where CTAs are actually going to become real sellers. But an event could occur. I mean, we were just at that price 3 weeks ago. An event could occur that could get you back to that price. And if it were to happen, then all of a sudden they become sellers too. So again, it's just more balanced here. If the market stays quiet, you could just continue to grind up because they're gonna be buyers. But if something happens that can shake us up a little bit, this is how feedback cycles work. You might start with vol control selling that comes in because the market has a 1.5% down day. That leads to additional selling. That leads to some pivot lows on this daily chart getting triggered. So some of your technical traders and funds are starting to get stopped out of positions. Then eventually that brings you down to the spot where the CTA sell trigger is, and they can begin to sell also. So that is kind of the way that I would think about it here. There is an increasing positioning risk to the downside, but there is actually still a positioning support and risk to the upside as well. But that's why we want to have that information in conjunction with the technicals. And today's a day to take notice of. On to your second question, can you please give your thoughts on large inflows into leverage ETFs and how they have to balance their holdings based on the price of the ETF? That's a great question because it's becoming increasingly more important because we're seeing more and more leveraged ETFs and we're seeing more and more volume and assets under management for leveraged ETFs. So the way that I know Charlie McElligott describes it is that levered ETFs basically act as negative gamma for the market. When people are plowing into leveraged ETFs on the long side, it creates a forced underlying bid in the market. I think a lot of that gets realized actually in the MOCs. I think you see like a big re-leveraging on MOCs based on levered ETFs at the end of the day, because that's when they're forced to kind of balance everything out based on the buying or something that happened that day. So, in other words, again, if people are buying T triple Q all day into the close, you might see an even bigger pop in the QQQ because of like a rebalancing on the QQQ versus like the levered T triple Q ETF. So, in other words, it like Charlie calls it like negative synthetic gamma. It's not like gamma in the way that we traditionally think of it that comes from option buyers and sellers and the market makers that are on the other side of that then having to hedge out their positions. It's just coming from the fact that these are levered products and as they increase in AUM, you have to buy the underlying, and as they sell, you also have to sell the underlying. So one of the research notes I've read somewhat recently was talking about like a VIX skew. So one of the potential catalysts for a big VIX spike or a big market sell down is like option skew, like paying attention to put skew, or when it comes to the VIX, paying attention to call skew that can create negative gamma, right? So if dealers are long the VIX, especially like out of the money, and have to buy on the way up to manage their positions, that is what creates some of these bigger events like what we had in April, or more specifically, the best example actually is from August. A lot of the August spike in the VIX up to where did we get to that morning? 65, almost 66. A lot of the spike in the VIX up to 66 and the market sell off that day, everyone likes to blame it on what happened overnight with Japan. And that was obviously the catalyst. But the real reason why we gapped down as much as we did that day and the VIX gapped up as much as it did that day was because of the VIX option skew that was ongoing with the market participants and the market makers that just created this insane movement from it. And my understanding is that the options market in the VIX is not right now conducive to a move like what we saw in April or in August. But um the VIX ETNs, the levered VIX ETNs like UVIXI, which I'm currently long, apparently they have been having increased under management inflows to them that the levered VIX ETNs could act as enough synthetic gamma, short gamma, to basically cause a bigger VIX spike. So you could get a bigger VIX spike. It just isn't, I don't think, the same dynamic as what created the April move or the August move. It's actually a little bit more from the levered ETFs, which when I read that, I thought was super interesting also. So yeah, something to pay attention to. Sherry says the Bears had a good day today. Yes, they did. Apex Joy, do you trade future now like VIX? I don't trade futures. I trade VIX options, but I don't trade futures. I've got some VIX outright calls on. I also have a VIX call spread on that I talked about in a few recent afternoon meetings that go out to August. Was able to pick that up for real cheap, real cheap. I love the play, but still need a catalyst in order to make money from it. Um, Thanks, Chi. From Robert, didn't you consider 2.7% CPI versus 2.6 forecast and 2.4% previous as a negative number? So, the previous doesn't matter because it's priced into the market based on the forecast. I think that it's notable, right? That's the uptick in inflation. Some of that is coming from tariffs, but that's what the market was expecting. But year over year non-core CPI is not as important as month over month core CPI. Month over month core CPI is the most important number, and that is the reason why the market initially ticked up on the CPI. Um, the 2.7% coming a little bit hot there. It matters. I'm not going to say it doesn't matter. It matters. And again, we are maybe beginning to see the very tip of an iceberg on tariff related inflation coming into this market, and maybe that spooks the market a little bit. But it seems like it's small. We really need to see it happen in the numbers. Um, uh, from Robert. What would be your mid long term target for Baba? Let's see. I'm currently game planned Alibaba for a move to 140. Just on my, that's where my current game plan is sitting. Some resistance 135 you could look at, and then 140 takes you back to these February March levels. Is VIX option a future option or an ETF option? I don't actually know that. It's definitely not an ETF. I don't think it's a future option. I just think it's an option on the VIX itself that trades on the options market. But I would need someone else to answer that question. I actually genuinely don't 100% know how that's structured, but you can buy options on the index, right? On the I've got no, I don't have any on right now, but sometimes I have options on the SPX, or right now I have options on the cash VIX. The thing about the VIX is that there is no good way to trade this thing that I'm aware of, because even though I'm long UVixy right now, UVixy is such a piece of garbage. It really is. It's such a bad product to be long. There's none of these ETFs are good to be long. The VXX, the UVixy, none of them are good to be long, except for small duration trades. Because when you're right, you can be right real big, real fast. Like what did we do in April on UVixy? UVixy went from 22 in the beginning of April, and then a couple days later it was at 53. You can be really right really fast. These things can double. They can give 100% moves in the blink of an eye. But when you don't time it perfectly, they just bleed out. So they're a terrible product to, like, let's say you had a thesis that the VIX should spike somewhere between now and September. And if you were trying to implement that thesis through UVixy and you're right, but you're not right until the beginning of September, you're going to bleed out so much decay in UVixy by the time you're actually right that you'll be lucky if you make your money back even when the spike actually occurs. That's how bad of a product it is. So I actually think when it comes to finding a way to trade the VIX, that using options is probably the best way to do it, because then you are using options is the best way to do it, because then you're still subject to the decay of the option, right? So there's still a degree of decay there, but yes, exactly, Apex Joy. Um, there is still a degree of decay from the option itself, but I almost feel like that's the best way to use it. Yeah, it's an index option like SPX option is what I thought. Thank you. All right, cool. Back over to the VTF here from Dennis. Good question there about the signal by Dave. It was simply just shorting the retracement, in my opinion, to the open at 10:15 on the 560, which I'm gonna use. Yeah, I remember this retracement back to 560. Oh, you know what? I think I did call this out with you, Dennis. I remember, I don't know if I specifically called out the short, but I was like, we got to watch 560 here. We got to watch 560 here for failure. And then lo and behold, it happened. We got that little bit of lower high for the market. I called this out today also for the reason price was moving today, felt different, but that was simply not an easy trade. Yeah, it was not an easy trade. None of that's been easy trade. I didn't make much on it, which is a bit frustrating, but I think it also not necessary to make this early call be right and get paid. There'll be opportunity, like Derrick said. And if this was a signal, it'll lead to more signals. Yeah, for sure. For me, Vixie Bull. Wouldn't more AUM for you, Vixie, be bearish because more people are buying vol? Yeah, exactly. It's bullish for the VIX, is what I was saying. It's bullish for the VIX because UVixie is a levered ETF. These levered ETNs, I guess technically an ETN, these levered ETNs that are gaining AUM from the VIX can act as like negative synthetic gamma for the VIX. In other words, that increase in ETM for UVixy, AUM for UVixy, can be a catalyst that propels the VIX higher if it begins to move higher. Uh, in the same way that options, I guess if you think about it, options are a levered bet, and ETFs are a levered bet, and they both, when you're buying them as opposed to selling them, you're buying options, that can create negative gamma for that stock or for that market. When you are buying levered ETF, that also creates like a degree of like this negative synthetic gamma for the market. So that's how it impacts it. Uh, I'm VXX. I'm pretty sure has bad decay also. Yeah, it's kind of been holding. That's interesting that it's holding up. That it looks like this chart. Yeah, it's actually not that bad right now. It's interesting. I got to do a little more research on that, or maybe you can for us, Apex Joy. But I'm pretty sure it's been a while since I've really looked into it. That VXX has some kind of gross decay as well, but it doesn't look like it in the chart when you compare it to the VIX. So it's pretty notable. Requires some more research. All right, folks. Great afternoon meeting today. I hope everybody had a good day. Day to take notice of? Is it a day to take notice of? It's a linked out failure. Is it a day to take notice of? Have a great night, everybody.